Hello everyone, welcome to the Ichimoku.co and ForexTrading.tv daily analysis for the SP 500 for the trading day ending Monday, December 2nd, 2013. Well, a change of trend today, confirmation of that with the candle making a lower high and a lower low, following the market extending this major high up to the 1813 level and above the 1810 level and the previous area of resistance from the prior three candles. Today we've seen the sellers come into this market. For the previous day's trading, the sellers had control as we extended the market up to those highs and did set the market up for this change of trend, and it's not before time that we are seeing something of a change of trend in this market. The market is looking a little overextended. The size of the black body has increased on the previous black body and suggests that in net terms the sellers have continued the momentum to the downside in net terms, and suggests that we could see this market trade lower. We've also seen the sellers close with control by closing down below the midpoint level and towards the low of this current candle. The problem here for the sellers, however, is the 1800 round number of potential support, and if we look in the recent past, it was an area of resistance. We had a bullish breakout up above that level. Two candles after that we saw the area hold as support, and now we've seen price rejection from below there. So the sellers once again have lost commitment below there, so that area will be crucial to this market if the trend is going to continue down. We also have the Tenkan-sen trading just below there at 1795, so potential support just below the 1800 level, and also some minor support around the 1790 level, but that's only minor. We did see some prior support and then prior resistance in the recent past. Down below there, some good solid support around 1779 and then at 1775 level, and all of this is suggesting that if this sell-off does continue, there is a very strong likelihood that this sell-off will hold up around one of these levels, and certainly the lower extreme of that is the 1775 level. I doubt very much that the market will be trading down through there quickly. Now, in terms of the Fibonacci extension, here we're examining the relationship of this new first time frame downtrend to the immediate previous time that the market was trending down, and here we've seen the market close just around the 50% level, and the failure to close below there does suggest a possibility of a change of trend to the upside, so we are looking for that, but the short-term dynamics certainly aren't favouring that occurring. The market did also test to the low around the 61.8% level and has been rejected from there, so that is an area that we should be watching moving forward if the trend does continue down. Some of the areas to watch are the 78.6% level, that's a minor level at 1793, and then the 100% level is a much more important area around 1788. In terms of the Fibonacci retracement of the prior uptrend, here we've seen the market testing down below the 38.2% level, being rejected from there, failing to close down below there. It does suggest a minor possibility of a change of trend, but we haven't seen that in the short-term dynamics. The sellers are still in control and does suggest lower prices. The 50% level is the interesting one here. That coincides with the Tenkan-sen, so that strengthens the potential support down around the Tenkan-sen around this 1795 area. Now, in terms of Ichimoku, obviously a bullish market in all three timeframes of the market, trading above the cloud, above the Kijun-sen and the Tenkan-sen. The extent of the market trading above the cloud, however, is really quite large, and it is suggesting that this market is looking a little overextended. It does suggest that this market is due for something of a correction, so we are looking for this lower high and lower low to continue based on that. The Chico span here is above the corresponding price action, so it's confirming the bullishness that we're seeing in the long-term, medium and fast-term timeframes, but is a fair way above the corresponding price action, so that also is suggesting overextension of the market and warning that this downtrend may continue. Interestingly, looking at the Kijun-sen, that is beginning to point flat, and is suggesting that price action may continue to be attracted back towards the Kijun-sen. So really moving forward, the 1800 level is crucial to this market. It should be an area of strong support, but if the sellers are strong enough to take out that level, the next level that comes into play is the 1795 level that corresponded with the one of the Fibonacci techniques. So that is an important level, and if we do see bearish activity down below there, we could quickly see the market testing down to around the Kijun-sen, around 1779 or the 1775 level. But I suggest that if the market does trade down to around these levels, we should see the buyers come in. We could also see the buyers come in around the Tenkan-sen, and that is a very real possibility that area is very strong support as well. But moving forward, we do need to react to the market as it interacts with the support and resistance levels. At the moment, the trend is down, the sellers are in control, the possibility of the market trading to lower levels, but watch how we interact with these important levels.